You are watching Macro TV. In this video, we are still busy with study unit 2, but we've moved on to chapter 4 in Fourie and Burger. Now, chapter 4 is all about adding the foreign sector to our model. You can think of the foreign sector as an addition to the circular flow of economic activity, spending and income. A country's transactions with other countries are made up of exports of goods and services, imports of goods and services, as well as international capital flows. And all of these are influenced by the exchange rate. And we want to add this component to our circular flow model and in the end add it to the ISLM model and use that model to examine the impact of shocks or policy changes on the economy as a whole. Now this video only recaps a few basic concepts from the chapter. First off is the balance of payments. So we just quickly want to brush up on our concepts. The balance of payments consists of a financial account and a current account. And you know that it's basically a record of a country's transactions with other countries. So in the current account, there is items related to the value of exports and of imports. The net income payments also get logged. You'll recall that those are the factor payments and factor receipts that are made. So if South African factors of production like labor or capital works outside the borders, we receive factor payments, wages or rent or interest, for example. But we also make factor payments if foreign labor or foreign capital or foreign resources are used in the South African context. So the net factor payments are also recorded in the balance of payments, and net current transfers are also recorded there. Transfers, of course, can be literally remittance payments, transfers, but also gifts of some kind, and they're all part of the current account. In the financial account, it's about capital flows, and those capital flows are also recorded in net terms. In other words, it can be an inflow or an outflow, but these are broken up into sort of direct or fixed investment, the so-called foreign direct investment, where foreign companies invest in a country, they set up a factory or they get a controlling share of an ongoing business. There can also be financial investment, if foreigners invest in South African shares or in South African bonds in the financial markets, or if we receive foreign loans, those will also be recorded there. Just the opposite is true as well. South African firms can make fixed investments abroad. South Africans can invest in financial markets elsewhere. We can give loans to other countries. So the net flow gets recorded in the financial account. Going to brief look at the determinants of imports and exports. So what drives imports? Specifically, domestic income is an important determinant. If income increases, imports will also increase. People spend more on imported products if they have more income. Also, relative prices matter. If prices of locally manufactured goods increase, then people would rather spend more on the imported options. It's cheaper. The exchange rate also influences the level of imports. If the rand strengthens, or in other words, appreciates, it means that the cost of imported goods are less and then imports tend to increase. And other factors that can influence imports are the trade policies, like import taxes or import tariffs or quotas. They can all limit imports in some way. If there are trade sanctions or there are boycotts in place, those could also limit imports. On the export side, foreign incomes are an important determinant of our exports. So if foreign economies like the US economy or the European economy grows and they have more income, they will also buy more of our goods. So exports to those economies will increase. Relative prices matter as well. So if the rand weakens, our exports become cheaper in terms of foreign prices, and then we will export more. And then the exchange rate again matters. If the rand weakens or depreciates, then our goods are cheaper abroad and our exports will increase. So that was a very brief introduction to the foreign sector as part of the circular flow. The following videos will explain balance of payments disequilibrium and adjustments back to equilibrium, and also the role that the exchange rate plays in this. Stay tuned.